Hello traders, Gary Wagner here. Approximately 11 o'clock in Honolulu, 4 o'clock in New York. It is Wednesday, 22nd day of February 2017, and this is the Daily Report for Gold and Silver. We do have gold prices firming. They had been trading about $2 to $3 lower for the better part of the morning session. That, of course, was up until the release of this most recent FOMC minutes. Those were released today, and those absolutely put some pressure on the US dollar and was very supportive, of course, of gold. Gold, in terms of futures right now, this is most active April, 1239.70, putting it up just shy of $1 on the day. The high 1241.90 and the low 1231.50. So not a tremendous range, but we are seeing green as we go into the close of this morning's session. Now, when we look at spot pricing up about $3, but in essence the same price, 1238, 1239, as you can see, low 31, high 1240 on the day. When we look at silver, silver is also trading higher, but showing a little bit nicer of a actual move to the upside. The low today is 1793. Silver is traded to a high of 1805, currently at 1804, putting it up about 10 cents on the day. So traders, yes, we are witnessing a day in which gold prices are extremely modestly higher on the day. As I said, futures trading up about 70 cents, spot gold trading up about $3. But the overwhelming characteristic when we look at this market has to be the resistance that has occurred roughly at the 1242 area. Now we're looking at a weekly chart, standard candlestick format, one basic extension, looking at our first rally as that $100 rally, approximately a 38% retracement, and then this most recent rally we're plotting as a wave 3. This is our 0.618% extension, and then this is our 1-to-1 percent extension, our 1-to-1 extension of this rally, which is why my upper level target still remains at 1280. But until we can see an effective close above this particular price point, my concern is more for weakness entering the market than a really prices moving substantially higher. And traders, I've just gone ahead and pulled up a Japanese average chart so we can get an idea not only of the trend, but the strength of the trend. So this is our first rally here in Japanese average format, daily chart, our 38% retracement. And then we had the beginnings of a pretty strong rally, but you can see that a little bit over a week ago, it really began to lose steam. You had the emergence of small bodied candles, red candles here. Now it has moved back to green with no lower wicks, but that was a couple of days ago, because for the last couple of days it appears as though we're back to that doji candle, which signifies a potential key reversal in the market. And that's the reason I believe we could see weakness before we see strength. Now that will, of course, change how we are looking at our current model, but we will deal with that if and when that occurrence is what we see unfold. And traders, we can also see a level of resistance that has currently occurred in silver. We are looking at a daily chart, standard candlestick format, really looking back for part of last year, this being December here, and of course this year, January, as well as February. We also have an MACD, a Western Technical Study, which is moving average convergence divergence. And as you can see, it appears as though these lines might in fact cross. If we do see this happen, at least as far as this particular indicator is concerned, that would certainly be signaling potential weakness ahead in the market. We currently are trading at 1803. We show resistance at 1850. We also show support at 1750, with that 1 or 50 cents being the range between current support and current pricing in silver. In other markets that we follow, for the 9th consecutive day, we have seen Dow Jones Industrial Index close substantially higher at a new all-time record high, 20,774.84, up about 31 points. Net change of under 0.2%. Not that much of a net change, but the fact that we have seen this kind of a consecutive rise day after day, 9 consecutive days, is incredibly impressive. Now, we did have a mixed bag with the Standard & Poor's trading slightly lower on the day at 2362, putting it off about 3 points, along with the NASDAQ. NASDAQ, though, did recover brilliantly at 5350, and that's putting it up about 6.5 points on the day. The dollar, which had been trading higher throughout the day, that was up until minutes were released, as I said on our opening statement, is now trading off about 0.2% at 101.20. And then lastly, crude oil is also trading under pressure, and crude oil has been really trading in a consolidated range with a bias to the upside, but absolutely range bound between about 54 on the upside and 52 on the downside. It is off about 1.33%, a 74-cent decline at 53.59 per barrel. Traders, we're looking at a daily chart, Dow Jones Industrial Average, one of the most impressive breakouts I have seen. We are absolutely near an exponential and parabolic move to the upside. The tactor angle is not as steep as a typical parabolic, which is almost a straight line up, maybe a 15% degree, and we're looking probably at 20 to 25. But nonetheless, take a look at these consecutive days in which we have seen the Dow close to higher pricing, except for this particular day in which it was a little bit top heavy. We can see that day after day, we have seen consistent gains within the market. Now, as I said, this is a daily chart. I want to switch over quickly to a weekly chart. We've just done that, this in Japanese average format, so we can get an idea of the strength of the current trend. And the strength, according to this chart and this study, is extremely strong. For the last 2 weeks, and now we're halfway through this week, we have seen tremendous growth in terms of the candle size. We have a lack of any kind of a lower wick, which means that at no point during the week did it trade at or below the midpoint of the prior week's trading range. And it is an absolute breakout once we broke above 20,000 on the Dow. We've seen the last 3 weeks really accelerate, increase candle size, and show everything in terms of a technical study that would indicate that this market has absolutely not run out of steam. So traders, no doubt, today's upside move in gold is modest, but it is nice to see it holding a firm stance, and it is nice to see the dollar beginning to weaken a little bit. Of course, our target right now is effectively to see gold pricing close above 1242 and maintain itself above 1242 for a short time, at least to give us technical confirmation that it is forming a base and looking at that particular price point as support rather than resistance, which it is currently doing. Therefore, we are going to remain flat with no active trades. The market right now is range bound, and we want to see if it has the ability to break above 1242, or if it begins to sell off, how it will react at our confirmed support level of 1220. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.